This episode, Matt Sneyd breaks down the massive failures he went through that inspired him to stop investing blindly and dive deep into creating his own financial reports. Reports he now shares with many other investors around the country. He also shares the data points that go into them, and how they've helped him become a better investor. Let's check it out. Welcome to Seeking Unemployment, a show dedicated to the most efficient path to financial freedom. Their bio intro talked about how you have some really cool technical, technology pieces or background or something like that helps you be more competitive.
So yeah, I'll kind of give you the backstory of why I'm not an analytical person at nature. My dad kind of is, but I have that gene, but I had to work that muscle. I'm good at marketing, good at tech. I developed a knack for design over the years, but detail oriented, like I'm a high quick start person. When you take like a DISC test or a Colby test, I'm a high quick start, not quite as much as like follow through and detail oriented. That's great for getting into the business because we made good money, whether it was luck, skill, just a lot of it just is action, right? Yeah, just getting out there and putting yourself out there and do.
So that personality type would not necessarily get into an analysis paralysis kind of situation that other people may get into.
Yeah, you see some people that stick in the circuit or the education circuit, and they're just in the washing machine going to course after course after course after course and don't do anything. Yeah. And it's like, why? Why are you doing this? Go take one course and go do something immediately.
I think it comes down to just like a guts issue. You're just kind of scared.
Yeah, and it's their personality. They're more analytical, and so they just have a really hard time pulling the trigger. And so a couple of quotes I like is, education without implementation is just entertainment. And they're just really entertaining themselves about feeling good about learning, but they're really not doing anything. And then what was the other one?
That's a very, very insightful and smart thing that you just said.
Yeah.
There's a psychological thing that happens when you go to situations, things like that, or you read about an exciting opportunity, and in your mind you basically put it at this little box on the shelf that says, that's my success box. I can access that anytime. And it gives you an endorphin that basically just says, I can do this.
Yeah.
I'm a successful person already. In some ways, in your mind, you're already a successful person because that's on the box, or that box is on the shelf. And it's a very dangerous thing to do if you really, truly at your core want to, achieve that goal, because when you do that, and I say that because I've done this myself.
Yeah.
And I've been completely guilty of this. It's a fascinating psychological exercise, but when you realize it and you identify it, then you can recognize that it's a problem that you've created for yourself, and then you get past it.
Yeah, or hire a coach, someone that can mentally push you a little bit outside of your comfort zone, and once you do it, you're like, oh, okay, and then it's not as big of a deal. It's not so scary, like a roller coaster, Yeah. And the other quote I like is ready, fire, aim, instead of ready, aim, fire, ready, aim, fire. So I really like that because it gets people over the analysis paralysis. They kind of fall one and the same, right? But that's great when you're playing small, right? So when I was first starting and I'm doing little West Side houses that are 100 or 200 grand back then, you can only screw up so much. And sometimes, and many times, you can screw up a lot and still be successful and come out ahead. But when everything changed was when the downturn happened. I started moving up to higher end houses, and then the market crashed, and we lost 100 grand on a flip in Mill Creek. And I was like, oh, that sucks. And then and then the next one was a break even, and all of a sudden there weren't these big checks coming in. It was like the market was starting to cool, and we were chasing deals backwards rather than the market going forwards, right? And so things got pretty hairy pretty quick, and we were in not a great spot. And so it was a big reality check about how serious I needed to take the business. And I kind of woke up, and my dad kind of shared, he was in charge of the finances and still kind of takes the lead on that. That's his expertise and what he does in our partnership. And so back then he kind of shielded me from where we were. Like, I knew we were doing good, but I didn't know exactly what we had. I just trusted him with that as far as how much money and where we were at. And he paid the bills and coordinated that. And when shit got real bad, he broke down and kind of told me what was going on and how much we were in debt. And I was like, oh shit, you know? And that was a wake up call for me. That's like where I consider where I grew up and started taking it seriously, and rather than just chasing girls and using it as leverage and being all egotistical about it, I realized my dad was counting on me, which means my mom was counting on me. We would borrow money from my sister, which means my sister was counting on me. And the reality, or the reality set in of how serious it was. And that's when I kind of woke up and really took the reins and started to like hammer down. And so that's when the shift happened, where I realized, okay, when I looked back at where we had screwed up and why it had happened, is because we were just flying blind. Like, we went to courses and we learned and we were doing stuff correctly. But in regards to like market cycles and economic education and reading the market data, we were completely clueless. We were just hoping for the best. We had not, I'd never read a market report back then. I didn't know what inventory was. I didn't know price per square foot and all this stuff. Like, it was really just like, you know, what they taught me in the thing, which is add up the purchase price, you know, you take that.
Fill out your spreadsheet.
Yeah, like, and it was not even a spreadsheet. It's like a back of the napkin. Like, what's it worth? Times it by 0.75 minus your repairs, and that's what you offer, and you'll make money. Because that's smart. Dumb it down when you're in the beginning. Yeah. But when you start to play bigger, and once you start to get a bigger assets and bigger risk, bigger reward, the ready, aim, fire, and the analysis paralysis, and the education without implementation, that one always applies. But like, the ready, aim, fire does not apply anymore. Like, after your first little bit, if you just continue to just kind of fly blind and just take action, that train will come to a halting stop, and you will get screwed over sooner or later if you're just flying blind. And that's what happened. And I had to wake up. And so then, because of the pain associated with that scenario and then working our way out of that hole, I was like, we got to change something here, you know? And that's when I started to get obsessed, like overly obsessed with data and analysis. And that's why that component of like why it's in my bio and stuff is like, it's a big component of my identity, lessons I've learned, and our business moving forward. And so now, like, I'll do market reports internally, and when people found out I was doing them, they look at them and then they say, hey, will you come speak at our investment group, or will you come speak at this meeting about it?
So you would create your own market report?
Yeah, it started out as internal completely. And then people are like, this is amazing. Will you come speak in front of my group with this? And I was like, sure. And so
what's included in a market report for you?
I mean, for me, I just started talking to a ton of people. I started reading all the other reports that were out there, but instead of just reading the report for what it is, there's interpretations, and not everybody can interpret the market properly. Everyone has a difference of opinion of what some of the data means. And I didn't want to rely on someone else's interpretation. So in the different market reports, a good market report that's publicized sites, right? Like you learn in college, you should cite where your information's coming from. So I made a huge bookmark list one week when I was just going haywire on this thing. And I made a bookmark of every source of market reports, or where they got the sources from. And they started to see similarities, and I had this thing of 20 files of different websites of, you know, the Fed and governmental websites and all these things of like where the mortgage industry is getting the source of their data from and stuff. And basically compiled this thing of where I get them all. I can't name them all off the top of my head. But now when I have some time, or things seem a little bit different, or I get a feeling or a gut feeling that things are changing, I'll go back and basically update. I have like a templated presentation, and then like update the slides for what it is today. Yeah. And there's certain like red flag indicators that I watch on a much more frequent basis, like a short list of like 5 websites that I check on, just to see like, okay, where's inventory at? Where's our days on market at? You know, where's the yield curve at? Stuff like that.
Your market report is specific to Utah then?
I'll do a local portion, I'll do a residential portion, a commercial portion, and then I'll do a national portion.
Okay.
Yeah, but real estate is local, no matter what people tell you, and you can do a lot of different business models in a lot of different states and in different markets, and they will work, but it is not synonymous. It's not like every model works in every city, and every market is local. And so the local aspect of it, if you're working in your local market, is one of the more important aspects of it.
Because all the market reports that I've looked at personally are they typically go by city or sometimes by state.
Yeah.
And So that's kind of why I ask if you're
But like National Association Realtors, UAR, NAR, they'll do national data. And you want to get the big picture of, because large catastrophic events can, on a national level, can affect you locally. But Utah's nice because we have a lag time of like a year in Salt Lake and then like 2 years in Park City, because Park City is a little more isolated with higher net worth. And so people don't get hit quite as hard. So that's also why I like Park City, is you've got lead time, and Salt Lake's nice because you've got lead time. If shit starts going south in other places, we've got a little heads up of like.
Where do you normally find it taking trends from? Because to me, it looked, on the last downturn, it seemed like it followed Southern California.
Yep.
California in general.
Yeah, we follow Southern California about a year behind is what I've kind of gathered.
Yeah, that's
Yeah.
what it seemed like as well.
And so that's nice when you have lead time, like red flags are a little like, if I get too many red flags all at once, then it's like, okay, maybe we need to back off here.
You know what? I was actually just in Southern California a week or two ago, and I had a few interviews with some other people there. And some of the people that I were talking to, they keep talking about how everybody keeps moving to Idaho.
Mm-hmm.
From there, they used to be moving here.
Yeah.
Now they're moving up to Idaho, which is kind of interesting. So
yeah, because Idaho is Utah or Salt Lake 15 years ago.
Right. Yeah. So now you can still get really inexpensive places. There's still a lot of land out there. You can get bigger, more acreage and all of that.
Yeah. And sure enough, when you look at the net immigration and appreciation for Idaho, Salt Lake, Idaho just surpassed Salt Lake in both of those. So the data supports that as well. Yeah. But the seat of pants and talking to people is irreplaceable, because I use that to also guide where I do research and to back up feeling. But like the seat of pants feel, because data's lags sometimes. Some data takes like 3 months to come out before they'll like report it and make it live. And so, it's a combination of that. That's why I say I like to go to the source of the data, because I use my seat of pants and my experience and my gut to make a certain decision and then go get the data to back it up, or vice versa. But like, I don't want to necessarily rely on somebody else's interpretation. One of the best things that happened to me was that downturn and losing money and kind of waking up, because I've seen one of the biggest booms and biggest busts, and I'm only 33 years old. That's going to fare pretty well for me later on in life, I assume. But I learned the business through a downturn, a significant downturn. So I know how to grind if I have to. So that's the good thing. On any loss or any bad situation, and you can consider this house even a fairly bad situation / wake-up call, it's like there's a lot of good that will come from this. That will make me a much better investor going down the road.
How do you choose people for your team, like that you want to work with? What are your priorities? What do you kind of look down?
Yeah.
For me, as an example, I like to look, people that I want to work with are people that I first is connect with on a personal level, that I actually like spending time with. Then second would be, do I see eye to eye with them on, at least somewhat on on a business level and the goals and things you're trying to accomplish? What do you look for?
So there's like a couple cliche things that are true, like hire slow, fire fast, right? So like the hiring process and going through an actual process. And when we were growing our team, we were pretty rigorous about a process for that. So having a multi-level interview, and when I say multi-level, like you make them jump through a couple of hoops just to even submit their resume, right? Instructions.
See how serious they are.
Yeah, or actually, can they follow directions? You say, first you have to do this, then fill this out, then send it to this email address and put this and fill and have this, and this in your resume. And if they don't follow the directions, you're out immediately. If they just send you a stock resume and you ask for something specific, they don't follow directions, okay? So you weed people out, because if you get 20 applicants, I only want to talk to like 5. And that's usually what happens, is you'll get 20 and like 5 will follow directions. And then from there, we do like a multi-step interview, right? So we have the first interview where we go over things in general. If we like them, we get a good feel for them, then we'll dive in and ask more serious questions, make sure and see what their plans of their future are, how dedicated they are to the business, what are their goals, are they in alignment with what our goals are they going to be loyal? Like that's a big thing. And do they want to stay in the business a long time, or are they really just going to learn and go do their own thing? That's a huge component of real estate. Neither one of them is a bad thing per se, but you want to know up front what their intentions are. Are they here to just learn, or are they here to be part of something and be an employee and have an employee mentality, or are they a entrepreneur? And that's probably the biggest thing, especially for real estate, but anything, I mean, let's take video and photography, right? Yeah. Someone might just want to learn the ropes from you and then go do it and be your competition. It's not a bad thing. I've had both come in the door and had both work for me, but I really want to know what doesn't work is when someone says, or it's implied, or I assume that they're in it for me or to grow my business and to be my employee, but they're really in it for themselves. Yeah. That's when things can get a little sketchy. So you want to get those types of things clear. Like when someone's in it just to learn, they're a free intern. They work for free and they do as much as they want to do for as long as they want to do, and when they're done, they're done. If someone wants to be a paid employee, they need to be an employee mindset. So in that interview process as well, in between the first and second interview, they do a Kolbe test, which is a personality profile. You can have, the DISC test and the Kolbe test, both give you different insights, but you want to make sure that you're hiring the right person for the right job and the job description, and that person's qualities fit the qualities that are good for that job role. So you're not going to put a sales guy behind a computer all day and vice versa, right? So,
yeah, not going to be happy.
Yeah. But ultimately, I only really do want to work with people that I enjoy and have a fun time with. And so that is a kind of all-encompassing aspect. But over the years, people's lives change. I'm having a kid now, and what I was doing 2 years ago, I'm not doing now and isn't important to me. And before, when I was single, isn't as important, and I was doing different stuff than when I'm married. And so people's cycles of the chapters that they're in life, if they match up with you, it's like Tate's kind of like would have paired well with me, or does pair well with me in certain respects, but like Tate being older, single, no kids, would pair up with 25-year-old Matt really well, but they're in different different ages, but same chapters of life. Yeah. Whereas I'm not discriminating towards having kids or being married or this or that, but like you have different priorities when all that stuff happens. And so being in the same chapter as somebody in life is also pretty important.
Even though he's a little bit older than both of us, he can go down to Moab in a weekend, no problem.
Yeah. And he can fly out to Oklahoma City, because I was like, yeah. You need to be out there once a month? He's like, yeah, I'm mentally prepared for that. I don't got anything going on, and I'm dedicated to this. Like, he's in grow mode, and I was in grow mode for a while, but I'm not in grow mode right now. I'm in sustain and be dialed in and be very, very methodical, Yeah. So being in the same chapter kind of is really important in regards to that. Yeah. But I'm not trying to grow my team right now. I have an apprentice that's learning, but from my personality, something I learned about myself, my personality is about an entrepreneur, about quick start, about doing deals. I like the thrill and the analysis and being creative around deals. When I grew a team, I became a manager. Yeah. And I don't like to manage people. I'm not a good manager either. Yeah. I can be good if I really work hard at it, but it wasn't a natural skill for me by any means.
Yeah, that's interesting. I always think it's very fascinating when people know their shortcomings.
Yeah.
Recognize and know their shortcomings. This is awkward now because you're here and I'm talking to you about it, but it's something that I respect heavily in a lot of people. When they do know that, it's a trait that I respect a lot.
Yeah, self-awareness, humility. Like, as much as I'm like I'm not hesitant to talk about any of the numbers and the losses and admit when I'm wrong for any other reason except for other people involves privacy. But that's I think it's a good quality, and I've tried to be as self-aware as possible. And vulnerability is a really hard thing. Like, we grew up not having that. It's about being the guy and being strong and not crying and all that kind of stuff. But as you get older, you become more vulnerable, and it's a strength, I think.
I agree with that 100%. And for me, I think it's more about being authentic than necessarily being vulnerable, because if you're being authentic, you can be strong when you're feeling like, I feel strong and confident and good about this. And that's great.
Yeah.
Just like you can feel like, I feel defeated, and if you're authentic about it, then I just think it's interesting that you bring that up, because that's actually the number 2 most thing that I respect about other people that I've noticed that as a trend. when I see that in people, I'm like, I really respect that a lot.
Yeah, that's when I connect with somebody. Is like I went through a lot of, like, I would say late 20s. I spent a lot of time on personal development and distinctions of life and humanistic nature and, you know, responsibility and integrity and all of these things. Like honesty, integrity, respect is what my dad raised me on, was those three things. And nothing else matters as long as you have those things to focus on. You're not always going to be 100% in those categories, but and authenticity kind of falls into there, right? But those are like super important. When I connect with somebody, it's like they have those qualities for sure.
What are you working on that you could use help with that you want to plug? Like, let's just say this is not true.
Yeah.
Let's just say there's 1 million people watching this YouTube channel.
Yeah.
And they're like dialed in. They're like, I would love to help this guy. What can I help him with? What would you say?
Yeah. So the number one thing, you brought it up earlier, is I'm always looking for money, right? So we do multifamily deals, doing large commercial deals. You've got to put down, like the last deal we did, it was a $4.2 million raise. I don't have $4.2 million bucks.
Yeah,
Not trying to tell anybody I do. So
for that, you're probably at like 50, 60,000 in earnest money.
Yeah, 250.
250,000.
Mm-hmm.
Really?
Yeah.
Wow, they wanted a lot then.
Yeah.
That's
It's different on every deal, but they weren't messing around.
Yeah.
And they had multiple offers, so that's a big way we got that deal, was being stronger in the earnest money area.
Okay.
But yeah, we're looking for money, whether it's, you know, it's usually silent partners and or equity partners that if they have a good chunk of money, that is a huge portion of being able to do these deals. And you can only do so much if you try to do it on your own. And so I would say raising money for people that want to be passive. If you got a good chunk of money and you don't know real estate, it's a pretty big undertaking to go learn it unless you're going to fully dedicate yourself to it. But like I said, the money's in the money. Like if I had $5 million, I don't think I'd necessarily go learn real estate and grind in the ruts and the ditches and figure it out. I'd go find the smart guys, the good guys, the guys with the track record, and I'd go invest with them. Like arguably, no, it's probably true. The guys that I've borrowed money from over the years have made more money than I have collectively, right? So like all of my deals versus all of the money borrowed, my interest outweighs my profits. So the money is in the money. And so if you have money, that's what I would do. That's the end game. And some people have that and don't realize that and get caught up in the glitz and glamour of the flipping and the remodeling and the grind, and that's not the place to be. So yeah, 1 million people watching, I'd love to pick up money that way, right? I don't know what else really, to be honest with you. Bring me deals. I mean, that's local though. That's not like a, you know, national thing. It's like if you got multifamily deals.
You mentioned that in your podcast that you want to do more deals in Utah. So,
yeah.
And I thought Tate's comment to that was great. Well, it was great. It's like if you want to get into real estate, easiest way ever would be find a great deal and bring it to Matt.
Yeah, and I've been fortunate in that, whether it's a development deal or a commercial deal, an industrial deal, someone who just has something fall into their lap and they have no idea what to do with it. I've been very fortunate that I haven't spent $1 on marketing for 2 years. I shut down my marketing machine because my version of marketing is this. I give information, I give knowledge. People can see, I think, the authenticity and the experience over, you know, the camera, and they want to work with me. And so I've been lucky that a lot of people have brought me deals, and then I either buy that deal off of them or partner up with them and show them the ropes. I got a guy right now that brought me 3 acres in Ogden, and I'm showing him the ropes to learn land development, you know, how to do highest and best use. And so that is, if you're local, that's a great give or thing to bring to me.
All right, guys, thank you so much for watching. Hopefully you learned something from that video and reporting. If you're interested in connecting with Matt, his links are going to be in the description below. He's always looking for deals and for capital. So if you have either and would like to meet him, I highly suggest you reach out. Click on the subscribe button down here for more real estate investing content, and this video up here to see Matt walk us through the $2.3 million mansion he just built in Park City that we happen to be sitting in this interview. If you're interested in investing passively through multifamily apartments, let's chat and get that ball rolling. As always, I'll leave that link in the description below, and I will see you on the next one.